Good. I'll say good afternoon because I'm in Detroit and it's 12:40, but I'll say good morning to you because I know it's morning for you. How are you doing, Barbara?
I am doing great, Aaron. I am so happy to be here with you live.
I'm excited to have you. So before we get started, Barbara, I want you to just give a brief introduction to, who you are, what you do, and why we have to care about what you have to say.
Okay, I am a 4-decade investor. I've been a professional portfolio manager. I've taught university investments and finance at 2 major universities. I am currently a writer for Investopedia, US News, Forbes Advisor, and many other sites. And I run a media company where I own Barbara Friedberg Personal Finance and Robo-Advisor Pros.
Wow. Well, we're going to get into those in a little bit. And I mean, more accolades, accomplishments, and experience than I can dream of having. So, Barbara, what walk me through right now before we get into Robo Advisors or the personal finance site. What can you help me make sense of the current market? Because every day I look and we're just the spies trading around 400. We're bouncing around. People are talking about interest rates this, interest rates that. What's your take on what's going on right now?
Okay, I'm going to tell it to you straight. A lot of your
Straight up. I don't want
Yes.
any fluff. You don't need to, you can tell it to me straight up. I can handle it. I can handle the truth.
Okay, good. And I don't want your listeners to tune out because you're not going to like some of the stuff that I'm saying. Okay, so just buckle up, get ready. I have been through the terror of the 70s with interest rates up to 13, mortgage rates up to 13%. Yes, I was selling real estate at that time, actually. I have been through Black Monday. I have been through the crash of 2008, the busting of the dot-com bubble. So what is my advice for you? Look, don't worry about all the ups and downs, the hubbub, the war, the high interest rates, which incidentally, if you have any cash at all, you should be heralding the high interest rates because finally your cash and your bonds can earn a little bit of return to balance out your volatile stock investments. So just take a deep breath. Don't freak out about every blip on every little chart.
Well, I hear you. I don't disagree with you, but the one thing I gotta say is cash and bonds are just so boring to me, Barbara. I don't want to be in cash or bonds.
I know. That's why I said everyone's going to hate me. Because, look, I don't care if you're 30 or you are 70. If you want to have all your money at risk, that's fine. If you can afford a 20, 30, 40% drop in your portfolio, and you're fine with that. If you're cool, you're not going to sell at the bottom. I'm with you, Aaron. Don't have cash or bonds.
So, and that's what I'm, like you said, you've been through a lot of these cycles before. Something I found kind of interesting, funny, almost, I don't know, whatever you want to call it, whatever word you want to call it. When we started raising rates to deal with inflation, right, it was essentially a no-brainer, right? The Fed had to, but you still had critics saying the Fed's going to engineer us into a recession, all these things. You even had company leaders. I know specifically Elon Musk was coming out saying, oh my God, if we keep raising interest rates, this is going to be such a big problem, which obviously for some companies, it's bigger problems than others, depending on how much money they've borrowed, what their, cash flow looks like. But it was just so funny seeing how much people were freaking out over like historically very, very normal interest rates.
You're a smart guy, Aaron. I've got to give it to you. That is
I wouldn't go that far. I wouldn't go that far, Barbara. I've tricked everyone here into letting me come into the office and get paid to be on this show, but I wouldn't go that far.
Well, we'll put our secret. But
Okay.
Hey, you guys out there, do you know what the historical rate for bonds is? over, 100 years, the average bond rate is 5%.
I was gonna guess 4.5, so I was gonna be pretty close.
Okay, see, I told you were smart. So, okay,
Um,
are interest rates crazy high? No, they are not. But if you're 20 and you've been investing, for a minute, then you think we're in the stratosphere. We are not.
Yeah, and that's what I think. Like, to me, if I see a CEO or someone of a company that I'm invested in complaining about these interest rates, I'm like, all right, that's a big red flag. Like, what do you mean you can't handle 4%? Like if it gets up to 6.5, 7, whatever, and then now you're having a problem. Okay, I understand that, but if you can't withstand 4% or a few percentage like hikes, then that's a big problem for a company. But of course, I mean, these companies like Tesla that grew a lot in a zero interest rate environment were incentivized to do so. And it kind of, if you were making money, stupid not to borrow and grow more in that environment. So I get it on both sides, but it's interesting, I guess, to say the least, to see how many. I mean, even you had Professor Siegel going on CNBC saying all this stuff. And I mean, I think a lot of economists have been surprised, shocked even, that how the economy has held up, how unemployment has reacted to these interest rates, and so far, to me, it's like, all right, we're good. Our economy's been doing well. Our inflation's starting to come down. Let's, as long as things keep ticking, like, we're fine.
Well, and if you're a fundamental investor, which means you actually look at what's going on in the company. What are the sales? What are the earnings? What are the margins? What are the price earnings ratio, price to sales, price to book? If you look at all that stuff, then you're going to find the companies that actually have some product, some growth, some future prospects that are not leveraged to the hilt that will ultimately perform. I have stocks in my portfolio. And just as an aside, I'm pretty much an index fund investor now. Even though I used to be a stock picker, I have stocks in my portfolio that I have held for at least a decade that have increased 5, 8 times. And these are names things like Stryker, like Lowe's, Pfizer, I just bought when, during the pandemic. But they've got the metrics, they pay a dividend, they're going to make me money for the long term. If you're trading in the apps and you're looking at sentiment and using that as a guide to trade, have fun for a rocky road.
Right. That's what's funny when people look at sentiment, because it's like price determines sentiment, right? If the SPY crashes 10% from here, people are going to get a lot more bearish. And if it goes up 10%, people are going to get a lot more bullish. So it's like, why look at sentiment when you can just look at price and then where sentiment's going to be going? But Barbara, I want to get into the Robo-Advisors. Before I bring up the page and we talk specifically about yours, what is, a Robo-Advisor? It sounds, like I'm going to walk into a like office and some robot's going to tell me what stocks to buy. Is that what's going on?
Yeah, exactly. You just go into a room, bunch of robots, and there you go. Well, yeah, today technology is king, blah, blah, blah. It's simply a computer algorithm that helps determine an investment portfolio that will give you the greatest return for your risk level. And if any of you are older than, 20 years, if you're an investment student, then you know Harry Markowitz. He's an investment great, and most of the robo-advisors are built. Hey, that's my site, looking good.
There we go.
Most,
and look, I didn't even have to ask you. You've got it right here. What is a robo-advisor? Shoot.
Yeah, right. We can save ourselves some time.
Yeah.
Most of the robo-advisors are built on his research, which has been proven over and over. Everybody says there's a whole ton of ways to invest, and realistically there are. But when it gets down to it, the last analysis is it is very difficult to beat market returns. And the majority of robo-advisors capitalize on that by investing your money in a diversified portfolio of index funds and give you a market return for your asset allocation.
Yeah, that's amazing. I mean, it's amazing how, I'm sure you've seen throughout your career how technology impacts certain areas of finance and trading specifically. Have you seen just in the past couple months any like uptick in interest of robo-advisors with the whole resurgence of AI and everything?
I haven't studied that, so I'm not going to weigh in on it.
Okay, that's a very smart answer. I love that. Well, so Barbara, can we talk us for a second about like maybe who a robo advisor would be for and maybe who it might not be for?
I love that question because literally, first of all, it's for someone that wants their investments managed.
Okay.
Okay. So if you want to DIY all of your investing, although there is one robo advisor that kind of combines DIY investing and managed investing, and that is M1 Finance. But in general, most robo advisors provide investment management. But on top of all that, there are so many different varieties of robo advisors. So one of my favorites is, Wealthfront, a $100 investment management, all digital system. And they pick the stocks for you. I mean, they pick the funds for you based on a quiz that you take. Their fees are very low. And then you can also add in your own ETFs. You can even open a stock account as well. Then you have something at the other end like Personal Capital, which also, or even Vanguard, I think it's Personal Advising, Robo-Advisor, something like that. Don't hold me to it. They offer advisors and robo-advisor portfolios. So they have those that are algorithm based, and then you can also contact a financial advisor. So on my website, I've got a whole list for different categories: low fee, robo-advisors with human financial advisors, robo-advisors with wealthy investors. So there's really a robo-advisor for everyone. And the key underlying factor is if you want investment management, if you don't want to pay upwards of 1% for your investment management, then you might want to give them a look.
Yeah, I mean, and you've even got this tool on here that's the Robo Advisor Selection Wizard. That sounds really cool. We're mixing robots and wizards now. You know something cool is going to happen when you do that. But Barbara, kind of on the tail of my last question of who the Robo Advisor is, because you mentioned earlier that you're more of a ETF investor now, and I've noticed, I haven't looked at any data, but I've noticed anecdotally from people that I've talked to, friends my age, people in our audience that, a year or two ago, they were picking individual stocks, whether it be, Tesla, Roku, some of these, retail investor favorites. And now a lot of them are like, I'm just going to throw it into QQQ, or I'm going to throw it into SPY. It's easier, more hands off. What do you think about, the benefits of picking individual stocks versus just throwing it into an ETF that you like?
You have to know yourself. What type of person are you? Are you someone that really loves the process of stock trading, of stock investing, of stock research, that sort of thing? And if you are, well, then you're going to want to possibly invest in individual stocks. But research has shown decades, you can look at Vanguard, you can look at all the professional journals. Over time, it is nearly impossible to beat the returns of the market. And when you invest in a QQQ or you invest in an SPY, you are investing in the market. And if you just buy the SPY today and you hold it for 20 years and you compare your returns with your trading account in 20 years, 9 times out of 10, the SPY is going to be better.
Might even be higher than that. Might be 95 out of 100. I don't know, but
exactly. So let me tell you what I suggest, okay? Because I don't have the time to do a full on, and I buy the research because, even someone who's had 40 years of experience, your investing success is based on not only your skill, but also on luck. And I'm happy with market returns. Stocks have returned nearly 9% on average for the past 100 years.
That's crushing inflation.
Yeah, I'm not going to sneeze at that. So what I suggest is I like to have 95% of my investments in a diversified index fund portfolio. I also have a robo-advisor. I have the Schwab Intelligent Advisor for one of my retirement accounts. It's free, no management fees. The only drawback is it has a little cash in it. If you don't like that, well, then choose another robo-advisor. But my advice is for someone that wants to match the markets and is patient and is not looking to make $1 million in 1 year, which incidentally is very unlikely, then index funds are the way to go. If you want to have fun with your stocks, I loved what you said, Aaron, in the last interview. I take a little bit of my money and I do options or I do stock trading or whatever. If you lose it, you're not going to be sunk.
Yep. Yeah. I literally treat it like I treat my sports gambling. Like if I'm going to throw $100 on a basketball game, I'm going to throw $100 on a SPY option. I treat them the same because I know there's a very damn well good chance I'm going to lose both of those. I could win some money, but there's a good chance I'm going to lose. So I'm not going to do it with money that I need. I'm not going to do it with money that I need to pay my rent or anything. And so it's taken me a while to get there to learn, a little bit. People, I think a lot of times you got to learn through losing some of your own money, what's smart and what's not smart.
You do. And that is the best way to learn. But I am so sick of getting in the car with my Uber driver who's telling me about how they're on the Reddit stream of, what is that called, Aaron?
Wall Street Bets.
Yes, on Wall Street Bets, where they're gambling on GameStop, which, their fundamentals are crap. I mean, I'm not here to bash any one company, so
I think
French,
you can say that here.
Okay, and they're waiting for the day when they're gonna quit driving for Uber and they're gonna become a day trader. Come on, look at reality. Yeah, some people do it and they are successful, but how many people have been a day trader, a stock picker, an active trader, and made a lot of money consistently over many years? And I can tell you, it's a handful.
Yeah, I mean, even Warren Buffett, I believe in his last letter, wrote about how a lot of Berkshire Hathaway's success over the past 2 decades can really be boiled down to like a handful of good investments, right? Apple and then a few other things. And you look at some of them and like, I think Buffett's like down on Kraft Heinz and down on like some of these other things. And it's like, even he's like, yeah, you just need a few really good winners. And I don't know, he's not going to call it lucky, but in a way, right? Like he adds some stocks. Some of them do well. Some of them don't do well. And he keeps adding to the winners and he's got a good strategy for it, but it's not like he's 100% either. So I don't no one out there, I think, especially someone just getting into it, should think they have, some great ability to always pick these stocks, because even if Warren Buffett's missing on a lot of them, but making his money on a few of the good ones, that should tell you something.
Yeah, most of us are not Warren Buffett. In fact, I guarantee to say in our audience, how many people do we have listening now?
We've got about 100 on YouTube and a few hundred in some other avenues, some on Twitch, some on, watching us live on Twitter.
And of course, all of you that are definitely going to tune in later and listen to this on YouTube.
You guys better.
I'm going to tell you that 0.1% might have the combination of skill and luck to make it as a day trader or as a stock picker.
Yeah, and that's where
that way, you might as well just go play the lottery.
Yeah, and that's why I have friends that reach out to me. I don't know why they do. Some of them reach out to me and ask me, how can I start getting invested? And I literally tell them the most. I'm not saying this is like great. This is not financial advice. This is me, an idiot, telling my idiot friends what to do. I tell them like to, you know, if you download Robinhood, TD Ameritrade, whatever it is, set a recurring investment, whatever you can afford, say $50 a week or month into the, you know, pick an ETF. I usually point them to the Vanguard ones just because they got a low expense ratio, right? VU or, you know, something like that. And I'm just like, literally set that recurring investment and then delete the app. Don't even look at it. It's just going to take $50 out of your account every week or every month. You don't look at it, and then open the app in like a year or so and thank me. Or maybe not this year, but in 2 years, then thank me.
That is brilliant advice. Aaron, you're less of an idiot than you think.
Well, I appreciate it. I appreciate it, Barbara. You've got, you know, the experience and everything that I aspire to have. So, you know, just know that I'm looking up to you right now. Just because, you know, you mentioned you're more of an ETF. Can you give me a few favorites?
Oh my gosh. Now you are, because literally, I don't look at my portfolio that often.
Well, and that's
I,
great. Do you know? I read a funny thing the other day. It came out older, but there was I think it was TD Ameritrade or maybe Charles Schwab did a study on its best performing accounts among like retail investors. Guess who they were?
the ones who never check their accounts.
Yeah, so I was thinking it's the people who died, but it's close. It's people who completely forgot they had their investment accounts.
Yeah.
It's the people who
Oh,
forgot
I
about their
love
accounts.
that. I'll tell you what, I'll give you my asset classes and
Okay.
maybe that will help you, because literally the only thing I'm doing now is, and I do have a fair amount of cash and I'm 100 years older than your average listener. So, you know, I'm more in a capital preservation stage and a modest growth, versus when you're under 50, you do want to be in a more growth oriented mindset. I'm just not. You know, what I do with my cash is I roll it over right now into 3-month T-bills. And that's what I'm doing actively. So the type of investments I have, of course, I have SPY, of course, I have VTI, um, I have a short-term bond ETF. I have a value ETF, small cap ETF. I have a REIT. I love real estate. Okay, I got my teeth wet on real estate. My family's in real estate, whatever. So I have a REIT, stopped investing in individual real estate. So that's, you know, I like a broad diversification of a variety of ETFs. I do believe in the anomaly that over time, small caps will do well. And that's because they have more room to grow. They can move a lot faster than a large cap. So I have some attention on small caps, and I definitely am international. And you might think, oh my God, international has sucked. Yeah, it sucked for 20 years. But I'll tell you, if you don't have some underperforming sectors within your portfolio, you're not diversified.
Yeah, and I like that because I believe, not wholeheartedly, but I believe over time there's, you know, some sort of reversion to the mean. So if, you know, Europe's down 20% against the US over 10 years, that, you know, they're gonna make eventually kind of catch up of, you know, and again, it's not always like that, but I do think sometimes, you know, you do see that reversion to the average or to the mean a lot of times in the markets. Well, Barbara, this has been a great discussion. I'm going to go ahead and also drop the link to Barbara Friedberg, personalfinance.com. Do you want to just give us a brief kind of synopsis of that website as well?
Absolutely. Barbara Friedberg, Personal Finance. This is my baby. I started it in 2010. And it's just got a lot of sound advice. It's pretty much based on my beliefs in investing. I've got a few articles that promote different types of investment services that I believe are viable and are not get rich quick. And it's just a nice place to learn some basics about investing. And I want to encourage your listeners before we sign off, that you really want to ground yourself in basic investing principles. And you want to learn not from your pals on Reddit, but you want to learn from legitimate websites that have some knowledgeable professionals behind them. I mean, read the research on Schwab, on Fidelity, on Vanguard. Investopedia has an awesome, basic investing 101 information so that you can become a smarter investor.
Yeah, and this is awesome because, I mean, I know you don't need me to tell you, but there's obviously been this huge influx since COVID of people posting about finance and making videos about, oh, here's how you can make, $100,000 trading options and all this stuff. And I could not stress this enough, that if any content, any person out there is trying to, convince you this new way to get, run as fast as you can, right? This is not, it's not meant to be the sexiest thing in the world, right? Saving money and investing in ETFs over time. But really, that's like the tried and true way of growing wealth and setting yourself up for the long term. And trust me, I get it more than anyone, the appeal of options and trying to, make this money quickly. And I've learned through, my own experiences, hey, it ain't that easy. And there's a reason it ain't that easy, because if it were that easy, we'd all be doing it. We'd all be millionaires and we wouldn't be working. We'd all be chilling on the beach. But that's not what we're doing because, the market, Mr. Market, chews up and spits out people that try to get rich overnight. And this content on here, Barbara, things that how you can save money for retirement at 30 and eventually become a millionaire, like stuff like that is, I would implore all listeners, if not on this site, if not on Barbara's site, find content like this opposed to, like I said, here's how you can make $1 million trading options, or here's where you got to go put your whole net worth in GameStop. And you might hate that. You might hate that advice, but I think if you follow it, you'll end up thanking us later.
Yeah. I mean, I have an MBA in finance. I've been investing for 4 decades. And if there was a way to get rich quick, I would have known about it by now. Obviously, maybe someone has figured it out. But if they figured it out, why the hell would they tell you?
Right, exactly. I mean, Jim Simons comes to mind. He figured something out and he made a lot of money. But outside of that, there's a few guys. But anyway, for people out there, check out the website, Barbara Friedberg Personal Finance. Barbara, this has been an awesome discussion. I'm very glad we were able to get you on the show, and I think we got to do it again. What do you say?
I say yes. Aaron, I love your style, your thinking, don't sell yourself short. You are a very savvy guy with some real grounding in sound investment principles.
I appreciate it. And just between you and I and all the other listeners, I don't know. I kind of just throw some of that self-deprecating stuff out there because, I don't want to seem too cocky or anything, but I don't actually think a lot of those things. If that makes sense. Essentially, I'm saying I know I'm not actually dumb, even if I call myself dumb. So, but I really do appreciate it, Barbara. That's very sweet of you to say.
It has been just a ball being on. I would love to be here. Hey, if any of you have any questions, you can just find me on my websites. Just click the contact form, shoot me an email. I read every email I get. Hey, and I forgot to tell you, I have a YouTube channel. Okay?
Oh, let me drop that as well.
Yeah, it's just Barbara Friedberg. It's just
Beautiful.
My name. Just search it. You can find me. And it's growing. That's what I can say. I'm, on my way.
You just make the content that is good and true in your heart, and the subscribers and listeners and followers will come. Trust me, it's not worth worrying about that right now.
Well, this has been so much fun, Aaron, and I'm at your beck and call. Anytime you want to talk, you know where to find me.
Oh well, you might regret saying that, because I might start calling you for just other stuff, not even market stuff, just life advice. I don't know, but I'll take you up on that.
I'm a mom too. Hey, ask my daughter. I can dole out life advice till the cows come home.
Well, how old is she?
She's 34.
Oh, okay. Maybe a little.
Sorry,
a little too
and
old
she's
for me.
married. So.
Oh well, there you go.
Yeah,
all right. Well, Barbara, Enjoy the rest of your day. Enjoy your weekend. I'll reach back out to you and we'll get you back on the show sometime soon. Okay.
It was a pleasure, Aaron.
The pleasure's all mine, really. I mean, this has been one of my favorite interviews we've done in a very, very long time.
Great. Thank you so much.